Good afternoon. Good afternoon, everyone. This is Bagadon. It is noontime, the 24th of August. And as we gear up now, the for us, the summer months are coming to an end, and markets are going to be getting a lot more volatile, a lot more going on, and we're just not going to have the kind of time. Hey, how you doing, buddy? Sir Brad, what a green day today. Well, that's a beautiful thing. It is a green day today. And but I just wanted to say on YouTube, it is free to follow us on Twitter, free to follow us on YouTube, and we will periodically come in and try to give you a view of the markets and what we're doing. Now we've been doing that a lot during the summer months here, but as we gear up and go into the fall, we're going to have less time. I think what we'll try to do, I'm not going to make a commitment on this because I just don't know. But I think what we'll try to do is try to come on about noon each day, about noon for about 30 minutes to 45 minutes or so thereabouts, give you a glimpse of Swing Machine, what we're looking at, and be available to answer any questions that you might have. That's what we're going to do. So if you want to follow for free and push the notification button and push the like button, we appreciate it. And we'll try to do that probably, we'll shoot for every day, but it might be just a few times a week. Of course, if you want to be a monthly member, you're going to get much more. And if you want to be an annual member, you're actually going to get this tool set on your desktop. In the meantime, let me just highlight what our members were seeing today. This is what they saw. And we're going to come in here and show you. So the VIX on a 5-minute basis goes along on a trend. At what time? 8:05. That was all today, right? So I won't circle the date here, but at 8:05. This is the S&P futures contract. And let's change this to a red. It's in the green, but it's short, so we'll make it red. Right here, this trade right here. And that went short at 7:45. Now, sometimes that happens. Sometimes the S&P will sell off in advance of the VIX, and then especially in the off hours, and then the VIX will follow suit. If you took that, so within 15 minutes of each other, so even if you took it at 8:05, I mean, you could have got the same, maybe got the same price, would have been very close. If you were trading a mini contract, you would be up one mini $3,000. That's what you'd be up. If you were trading a micro, you'd be up 300. If you were trading 10 minis, you would be up 30,000. Now, at 7:45 in the morning, the necessary margin for the 5-minute, the original margin that you must have on hand, and it's a minimum, would be $18,000. That's the minimum. At 9:00, in the morning, the original margin would drop down to about 1,800, right? So, I mentioned that everyone comes at this in a different way. That is with a mini contract, by the way, a mini. A micro contract, a micro that would have you up 1/10 the size of this, would have you up 300. The micro margin, I think, is about maybe $1,200 or $1,300. It's not too bad. And at 9, I think it's even less, right? So we're using margin, we're using leverage, but we're using it responsibly, measured, and disciplined. Cannot emphasize that enough. And we'll discuss, by the way, NVIDIA, of what people are doing. And it's what they're doing with the examples of NVIDIA. It's a fool's errand, but I'll show you. We'll save that. How that helps the trade. Okay, so let me just finish this, Sir Brad, and I'll answer your question here in a moment. I see it there. You're on a little delay. I'm just seeing it now. The 5 minute in Q, that also went short. The 53 means 53 5-minute segments ago or at 7:45. It's just shorthand for us, so we don't have to look at the clock, right? So we know. So that's why you put that in there. That's 8 grand, 8,000. Yesterday it was up 8,000 up, as you know. So that's, it's the crazy art in the basement, the NASDAQ, but 8 grand. The Dow right here. Check out the time, 10:45, a little bit later, and they're getting the Dow, $700. Now the margin requirement's a little bit different here on the Dow. And then of course the Russell is the least amount of margin. There's not as much leverage in the Russell. Good little market to trade. Those little trades are going off in the upper left-hand corner. We have a program that we're running and testing. And so that's what's going on. I'm not putting those trades in. I wouldn't suggest anybody take those trades. We're doing something specific now. And again, we're moving into the fall time. And so we're going to be really, 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 really busy. I was hoping to get a little vacation in here this summer, but, I said to Susie, we didn't. And this is just a phenomenal time to be in the market. It's going to be this way though. It's going to be a blast. And then of course we got gold, and gold is trying to go along right now. So let's just stay with this. Then I'm going to answer Sir Brad's question. And then this is oil. I also have an NVIDIA in there. We'll talk about that in a moment. So Sir Brad says, how that helps to trade same ticker in different time frames. Is that possible from account? How that helps to trade ticker in same time frames. I'm getting these darn little, YouTube is giving me these, how do I get rid of them? Oh, I'm sending hearts. I'm not, okay, okay. All right, it was cropping off your question. I was trying to turn off. I think I just turned off those things. Okay, so how that helps to trade same ticker in different time frames. Is that possible from one account? Yes. So that's a great question, and you can do that. So you see this time frame: 1 minute, 3 minute, 5 minute, 1, 3, 5. So this is kind of a comfortable view that we like to have. What we teach is initially to try to trade the 1 minute, the 1 minute. And that's where we start everybody with as little margin as possible so that they learn, and try to trade the 1 minute in the direction of the 5 minute. And that's what we're trying to do. But you can change the intervals. Can we trade it in other fashion, and can we trade it robotically? Yes, right. So we could program, this could have been programmed so that it automatically went in at 10:09. You'd be up, 2 grand. So here, give you for instance, let's say at that's a great question because it sets up for this. Say the 5 minute went short at 7:45. And you're thinking, oh man, I don't want to take that short, Don, because if I take that short at 7:45, I got to have $18,000 in my account, right? At minimum. I mean, that's more or less what you would have to have. Now that may change from firm to firm, but at that hour, that's what this firm is going to expect you to have. So you say, I'm not going to do that. You could use a micro, which would only be 1,900. But if you waited and you waited until 10:09 to take the 1 minute short in the direction of the 5, how much margin? That margin would have been $1,800. How much are you up? 2 grand. How much is that? Over 100%. Over 100. That's how those guys have those big buildings in Chicago and in New York and have their big homes in the Hamptons and everything. They use leverage, but they're using it responsibly, right? They got it, they're playing with different sizes and everything, but but that's what they're doing, folks. That's what they're doing. Now they're going to give, I hate to say it, but they're going to give the sheeple, 8 or 10% a year, maybe, to have the use of their money, but they're going to leverage the crap out of it. We're not leveraging the crap out of our accounts. We don't teach that. We don't suggest that. But on an intraday basis, you could, you want to be able to use it responsibly, right? It's a beautiful thing. It really is. And we don't keep track, percentage returns because, that's 100% return. 100%. And it's only been, since 10:09. It's only been a couple of hours, 123 minutes. We had 100% return in 123 minutes. They're trading thousands of these things, thousands of them. But you can trade multiple time frames. You can trade them mechanically yourself. You can trade them robotically, multiple time frames. You can trade multiple markets. You can, for instance, you can say if the VIX, and do this robotically, if the VIX is going up, I want to short the S&P. If the VIX is going down, I want to buy the S&P. You can certainly do that and do it robotically. And once you're able to do something mechanically and robotically, we then can put it into a computer program, and we can go back and look in time to get an idea of how successful that approach might be, or your concept. Maybe you have a concept, Sir Brad. Maybe it's a really good concept. Maybe it isn't. You kind of want to know before you spend all your time and all your money, chasing a dry hole, right? They do that when they're, and that's what we will do, right? So we'll do a back test, we'll do a forward test, we'll get an idea, and then similar to what they do in the gold fields of Alaska, they will drill little holes, right? They have a guy that comes out, and this guy says, "Hey, I'm thinking of buying this land," and he wants millions of dollars for it. He tells me there's so many ounces of gold in there, and they go out and they drill these little test holes to see what they can do. We're constantly doing that. That's what we do. We're drilling little test holes. Well, sometimes, sometimes we'll do that in simulations. Sometimes we will do that with real money, small amounts. Maybe we'll do it with micros, just drill little test holes and say, "Oh, okay, yeah, that's a good idea, Sir Brad. Yeah, that's going to work." And then we'll increase the leverage. We'll bring in a little more truck, a little more firepower responsibly, and we'll start digging. And much like a gold miner, what do? They call it washing rocks, right? They dig up the dirt. They drop it into a shaker. They wash the rocks. They get the little flakes of gold. It's called the pay dirt, right? And we're kind of doing something very similar. And they've been doing it this way. This is what the market is. It's always been this. It's always been this way. What they have taught you is that you should go out, work your little ass off until you're 80, even still, invest with dividends, and just send your money in there and just, be happy with 8 or 10% or whatever, whatever it is. Be happy that maybe you get that. Maybe you don't. Maybe they take 50% of it, right? That's what they don't want you doing what they're doing. So they're not going to teach you to do it. We will. You're not going to learn this at Harvard or Princeton. You're not. They're going to teach you to manage other people's money, and then you're going to go to work. They're going to go to work in a cubicle in a big tall tower, and look smart, sound smart, attract other people's capital. Maybe some guy worked at started a dry cleaning business and worked his ass off and has $5 or $6 million, and they want that money so they can trade it. They'll give him a little something, and maybe they blow it up, maybe they don't, but that's what they're doing. Thanks for the question, Sir Brad. If I answered it, if there's anything else, let me know. We'll let you watch. I wouldn't suggest you're on delay, right? So you're starting to see little, we've had a big down morning. It's probably going to continue. You'll see the 1 minutes, starting to go long a little bit. And that isn't, a big change. Everyone wants to be the first. We don't want to be the first. We don't want to be the first. We don't want to be the last, right? Think about it like a little, you're out in the desert, you're thirsty, and you come across a watering hole, right? And there's nobody around the watering hole. You don't want to be the first one to get over there and stick your head in the water. There might be a reason why there's nobody around the watering hole. You don't want to be the first one. You don't want to rush over like, wow, hey guys, we're the first ones here. I'm going to go over that watering hole. I'm going to have all that water to myself, and I'm going to drink it. And go. You want to be the first one. You want to be the smartest guy in the room. There's a reason why there's nobody around that watering hole. The water may be bad. There might be cracks in that water. Might be a trap, right? So you want to wait. Let the zebras come in. Let some of the other, animals out on the plains come in. Let them start drinking. They still there? Okay. And then, everyone else is, around there drinking the water. We don't have to drink it all, and we'll come in and, get on our all fours and go down there and get some water. But then they start to leave, right? And we keep drinking. You don't want to be the last one there. They might all be leaving for a reason. Animal behavior. So Swing Machine helps us identify the water in the desert. And it also helps us, if you learn to use it and you understand the game, you learn to use it in a very judicious, very disciplined way, maybe just a few times a day, not, I'm going to run over and get a drink, then I'm going to run back and I'm going to run back in it. You don't have to do that. Just got to get a little bit every day, right? And we don't have to drink at all. But you don't want to be the first one and you don't want to be the last one. We just want the middle. How does that equate to the market? We don't need to pick the very bottom. We don't need to pick the very high. We just got to play for the middle. Makes sense? I hope so. That's what we do. We're totally fine with that. NVIDIA. NVIDIA is trading, as you can see, we got it tucked in over here at 483. Yesterday, it was trading at $470. And at that time, we said this, and they had earnings last night, right? Prior to earnings, and when it was trading at 470, we have a tool that told us the expected move based on options, the expected move on NVIDIA today was $22. $22. She's currently trading at $13. She's up 13. Right now, she was higher, right? But she was too high. So that's, that is a classic example of where what the retail crowd will do is, boy, I'm going to get on NVIDIA. Oh, baby, they're going to have big earnings and they got AI and they got chips and they got this and they got that. And what they don't understand is, let me put NVIDIA up here for a minute and let me show you how we trade, right? NVDA. All right. And I'm going to change NVIDIA to a daily time frame. So NVIDIA, Swing Machine went long NVIDIA 155 days ago. That's when you should have been drinking at the NVIDIA Oasis, not yesterday, not this morning, 155 days ago. There was nobody interested in buying NVIDIA when it was priced at one. Let me clear off some of this stuff so we can see it. So NVIDIA was trading at 165 back on January 12th. That's when you wanted to buy NVIDIA or to begin to invest. That's when. Now, it isn't up $319. This is not leveraged, so the purse is calculated. It's up 319 points, right? So if you had bought 100 shares, you're up like 30 grand or something. But notice over here, see where NVIDIA is? It's in euphoria. Do you see that right here? Everybody's at the watering hole. They all think they're going to get rich on NVIDIA. Now they all want to drink. We went there back, on January 12th. That's not the time to buy NVIDIA. No, I don't care about the earnings. So what do? Well, we want to be diversified in what we do. And I'm sorry, it takes time. You have to learn how to do this. So I'm going to explain the trade. And it's a trade. We're not investing in anything. We're traders. We're trading. We're going from watering hole to watering hole to watering hole. So yesterday's trade was and still is go up to $500 a share and sell a call contract. But you have to know how to do that, what that is, what the responsibility, and I'm not suggesting you do this, but when you sell the call contract, you receive money. And then, but that obligates you to buy this thing at 500. And if NVIDIA does run to 600, there could be, it could go higher. I'm going to address that in a minute. But what we do is we want to take a portion of that credit and buy a call at around 515, because what we know is the likelihood over the next 20 to 30 days that NVIDIA trades back, and write it down, to 447, basically 450, the likelihood that we trade back there is 95%. 95%. There's a 5% chance it doesn't. And that's why we create the credit spread. But now is not the time to be buying NVIDIA. But this is when all the retail crowd will do that. They're always late. They're always early. And they behave in a crowd-like fashion because they don't have anything else. They don't understand the game. They don't know what they don't know. And that's a horrible place to be, especially when you couple it with arrogance. Because it's okay, it's totally okay not to know something. There's a ton of crap I don't know and about this market. In fact, I will arm wrestle you for the right to say that I'm the most ignorant person. I need to be, so that I'm open to learning. But when you have folks that don't know what they don't know, and massively ignorant to whatever it is, and then on top of it, with a little hubris, little arrogance, then it becomes really dangerous, and then it becomes, a mass, you know, like a pig pile. And that's no way to invest, and it's no way to trade, and it's just, but that's what they do. It's not what we do, and it's not what we teach. Oh, I'm sorry. I left the ESU on a daily, but while we're here, why don't we take a look at it? The ESU, when it was at 4,600 and 4,630, was up here in euphoria on a daily, on a daily. That was the time to have a big ass short on. And how one could do that, you could use options, which we did. Then, as you recall, it's been over the last couple of weeks, the market did in fact, and we had, let's put the VIX up to on a daily basis. And the VIX was down here in panic. So we had the VIX in panic. We had the market in euphoria on a daily, on a daily. Maybe I should change the 1 minute. Let me do this here. So make it a little bit easier to see on the eye how this works, right? So what we had was we had the VIX in panic and we had the market in euphoria. That is a signal to sell. It's hard to do because everybody is bullish. And but that's how we make money. Again, going back to the little oasis in the desert. You don't want to be the first one there, and you don't want to be the last one there. When we have the VIX in panic and the S&P in euphoria, all the animals, everybody is at the oasis there. It's a crowded swimming hole, or drinking hole. And you could get eaten by a lion. It's very, very busy. When we came down, when the S&P came down, it was only just a few short days ago. In fact, it was Thursday and Friday of last week. The market was in panic. And the VIX, as a measure of fear, was pushing up into euphoria. That was the signal. If you were short, that was the signal to say, hey, it's time to leave the watering hole. Don't stick around. Don't try to drink and drink and drink. Try to, it's time to go. And in fact, it also could have been time to put on a long. When the and we called it out real time, we put it on our Twitter sphere. Now we don't do this day in and day out because we're not giving out the fish to our members. We're not that type of service. We're more about providing the tools, providing the education, and letting folks learn from that and do their own thing. But the S&P was trading at 43.80, right? Yeah, 43.80. Actually, yeah, could have, I thought it was even lower than that, but I'd have to go back. I think it was 43.80. Wasn't 42.80. No, I don't think so. But we were talking, it was just earlier this week, and getting a call option on that. Yeah, would have been 30 handles higher. A call option for this Friday, a very short trade that would have paid off very, very big. But where are we right now? Where are we on this watering hole? Well, we got the VIX at 40, and we have the market right also kind of right here in the middle. It should be up in here if it's balanced. So we're in the middle. We're dead in the middle. And the market's probably going to get a little choppy in here. And we're going to have, a lot of noise. We still have a Federal Reserve tomorrow morning out in J-hole. And I can't even recall the last time we ever had a bad market sell-off with the Fed, having a meeting of any kind. So my instincts tell me, to be, not to be overly bearish here. The market is just in the middle. For us to try to put on a position trade on a daily basis, I need to see I would rather see the market up in euphoria again and VIX down here, or I'd rather see the market truly panic sell and the VIX up here, and then we just go the other way. and we're trying to play for the middle. And when we're trading on a daily basis, we're going out 30, 40, 45 days. So we're not going to use futures. Sometimes we do, but mostly we don't. And we will define our risk using options. And so it's just another way that you can use this tool, but you do need to have some, some trading instinct and also some versatility, diversification in knowing, how to access various markets and how to structure those trades. And that does take time. It just takes time. And you have to practice it. And unfortunately, with options and those types of trades, they can take 2, 3, 4 weeks to play out. And you have to do dozens of them. So to get that experience, so the learning curve can be, it will be, is, measured in months, if not years. And we've done this a few times. So with NVIDIA, with NVIDIA being, and this would be a good time for NVIDIA. I'm not going to be a buyer of NVIDIA in Euphoria. I'm just not. I'm not. Now I don't have to, get in front of the, if the herd is coming in to drink and that's what they want to do, then let them do it. But as NVIDIA pushes up here at 486, the likelihood that it trades back down to 450 is about 95% over the next 30 days. So you can write it down. You can put it in pencil. And we'll see how it plays out. It might, there's no guarantee. I mean, it might go higher, but the likelihood is that it trades at 450 the next 30 days. So what I would be inclined to do is I'd want to come in maybe today and sell a call at 500, a little bit out of the money from where we are, collect that premium, take a portion of that premium, buy a call a little bit further up. I'd have to map it out, but it'll probably around 515 or so, maybe 520. I define my risk. I'll know my maximum loss, my maximum gain. It is a call credit spread. And I would push it out to October and I'd just put the trade on and let it play out. And if she, was to drift back, I'll keep that premium. If I was going to play it, if I didn't want to play it, and it's a story stock and it's noisy and, everyone else is, you don't want to mess with it, you don't mess with it. Find another watering hole. When we trade like this, you almost have to swallow your pride. If you have it in your DNA, which hopefully you don't, but that you've got to be the smartest person in the room. You got to be the first person. You got to have it, all figured out and everything. That's not going to really serve you well because again, we're not we're tracking money flow, and so by that very definition, we're not going to be the first ones. We're not. And we're certainly not going to be the last ones. I don't want to be the last one in. I don't want to be looking at that watering hole in the desert. And like I say, and all the zebras and everyone's, there's like no room. There's no room at the thing. And I got to go squeezing in there. And the next thing get, like I say, get eaten by a lion. Don't even see him coming. Right. So we try to, if we see a watering hole and we see some other animals around it, they're drinking, appears to be safe. They're not falling over and dying. They're not getting eaten by a croc. The lions aren't eating them. Like, oh, okay, we'll slide over. We'll get a drink. We'll collect that cash, and then maybe a few others come in. And as we're leaving, there might be more coming in to get a drink. And I'll be all right. Okay, fine, have at it. And we'll mosey on. So again, on YouTube, it's now 12:40, and we're going to need the resources on the computer. So if you have any other questions, feel free, visit the site, feel free to post them in the chat. And very close to the top of the hour, I will need to sign off or bring YouTube down, and we need to get back to work here. We are working anyways, but we're going to need the focus, and we're going to need the computer's total focus. Any questions, let us know. These counter trades are very seductive. They're very frequent. 28 minutes ago, if somebody did do that, we're not suggesting they did, but if they did and they just went ahead and said, I don't really care about that short, or I think it's overdone, and they took it as a counter, yep, they're up 187. 28 minutes ago, if you took the NQ, you're up 600. Yep. And 27 minutes ago, you're up 100 on the Russell. How is it they all move within 27, 28 minutes? How is it they all move within minutes of each other? They do this day in and day out and day in. It's machined. It's always been machined. I mean, they've been doing this since the 70s, folks. They're not showing you, you're not seeing the real market. What you're seeing on CNBC and everything is similar to what you were seeing last night, a charade. It's not how, what we saw last night. That was a show. That's a charade. And you know what? Every one of those folks that were on stage last night, they all know it's a charade too. By the way, as an example, and I still have NVIDIA down here, it happens to be on a 1 minute. NVIDIA is showing you that it's delivered $9. That means because the purse is not calculating any leverage on NVIDIA. NVIDIA is not leveraged. So if you had bought 100 shares of NVIDIA 42 minutes ago, 100 shares, you would have 100 times that. So you'd have $1,000. Wow, Bagger. Wow, were you kidding me? 42 minutes ago, I could have bought NVIDIA. Yep. But do the math with me. And I got to use a calculator because Susan's a lot better at math than me. Right? So I can't leave anything to chance. It's trading at so let's take it back. It was trading at $10, so it was trading at 480, right? 480. So 480 times 100 shares, $48,000. $48,000. Well, I don't have 48,000, but even if you had 48,000 and you had made 1,000, what kind of return is that? Divided by 48, 2%, 2%, right? Up here, as an example, on this 1 minute, we used 32 minutes ago, we used how much capital? At most $1,800, Don. 1,800. And we're up 300, or even on the NQ, right? The NQ is even better. So we'll go with the NQ. You used $1,900 in capital, and you're up we'll call it was 840. I saw that 840 divided by, we'll say 1,900, 44%. 44% return on capital. That's why one of the reasons why we trade futures. Crazy, crazy good. How many people trade futures? Less than 10%. Why? Because the Wall Streets tell you leverage bad, margin bad, dangerous, bad, you bad, we bad. We use it, but not you. I mean, it couldn't be any more classic. Now, what you can do, but Bagger, I don't have to buy 100 shares. I could have bought a call option. Yes, you could. And that's why that is what's driving and will continue to drive the price action until they lose interest, like in another few more days. So they don't have $48,000. So what they'll do is they'll buy an option on 100 shares, a call option, and that might cost them, depending upon the expiration date, that might cost them $500. But when the retail person or the kid in high school, because they got them on the phone, I mean, we got kids in high school that are doing this, though, they're in between classes. I'm going to buy on what is the Robinhood. I'm going to buy, a call contract on Nvidia, and it's going to cost me $500. Yeah, well, a kid working at Subway or Lowe's, if they work anymore, I don't know, or they daddy's money, they can do that. They could do that. But when the brokerage dealer sells them the call option, the broker dealer, guess what he's got to go do to hedge himself? He's got to go buy the damn shares. So they buy a call option for $500, but the broker dealer's got to buy $48,000 worth of stock. That's what creates the volatility. And it's beautiful because those kids don't have a clue what they're doing and they're going to lose, and, but they're having a good time. They're having fun, and, they'll learn, maybe not. But, so we trade. The example in the lesson here is, why are we trading futures? Because we want to make maximum use of our inventory, right? The money that's in our pockets and our accounts, that is our inventory, and we got to make maximum use of it. We got to do it responsibly. Now, leverage is a double-edged sword, though, right? You can overdo it. And in various markets and various firms, they can give you, obscene amounts of leverage. We don't trade that. We don't bank on that. We don't trade on that, because it can, you don't want to, once again, you don't want to get comfortable around that watering hole. And you can do the math on it. I don't have it off the top of my head. I believe it's, if you have leverage of, of 10 times your initial capital, and, you have, just a 1% drawdown, you could lose, 10% of your initial capital. I mean, it can put you out of business if it's misused, or if you use, too much. It's fun, but trading really shouldn't be, in our view, how do I put this? You don't want to have the fear and the greed, right? So we enjoy what we're doing, but we're deadly serious about it. We do enjoy it, but we're deadly serious about it. Everybody works way too hard for these things called dollars. It really doesn't matter what the currency is either, by the way. I mean, if it's going to be, maybe it's going to be dineros, maybe it's going to be, Bitcoin or Fed coin or something. The currency is just the currency. It's just a mode of exchange. Okay, so this is the YouTube will abruptly come to an end here, and so I won't necessarily have to come in and say goodbye. But visit the website, send us your questions, and we'll try to come on each day for the time being as we go into the fall, probably the middle part of the day for about 30 minutes, 40 minutes, and give you a glimpse of what the markets are doing and give you a chance to ask a question or two. But these extended YouTube sessions are probably going to be coming to a near end. We're just going to be way too busy going into the fall. And we will be, I don't go round the clock per se, but we put in a lot. And that's the other beautiful thing about futures. They're highly liquid, meaning the difference between the bid and the ask is very, very tight. And we also have great market access. NVIDIA, the trading on NVIDIA is going to close at 4:15. Then after hours, you get an hour or two but it's very thin and the spreads are very wide. And then it's closed. There's no telling where NVIDIA is going to open, tomorrow. You'll get what you get, if you hold it overnight. With futures, you have market access, they're closed for about maybe an hour a day, but you still have market access going into the evening and overnight sessions. So market access is also very, liquidity is important. Market access is important. Acquired trading skill is important. Leverage is important. Not to get over it, right? And you buy call options and you leverage on the NVIDIA, but you don't get yourself enough time. Now you got to deal with, an option, you got to deal with time decay. If you bought the call option yesterday, folks would have bought a call option. They're probably losing money if they bought a call option even at 450 because they would have overpaid. The implied volatility was very, very high in front of the earnings call. Once the earnings come out, the implied volatility gets sucked out of the option. And the next thing you know, like, oh shit. And I didn't make anywhere near what I thought I would make. That's why it's better probably to come in after the fact. And that's probably a pretty good place. But anywho, enjoy everybody. We're going to have to sign off here in a moment or two, but any questions, let us know. So we're going to sign off here, and as we do, we can see that the prices have ripped back up a little bit, but the 745, well, 745, we got the VIX on the wrong time frame. Should be 5 minute. The VIX warned at 805. The 5 minute is up 2600. The 5 minute at 745 is up 7,000. 1045 is up 600, 700. 1025, 500. Gold coming in a little bit. Want to say thank you for stopping by on YouTube. We wish you the best. Hang in there.